Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy. Now, if you've been following the channel, you'll know that Russia has severely limited the amount of data that it's prepared to release to the West because it says that it was a security issue. They didn't want anybody to know what was actually happening in the economy because it would have enabled the West to apply more sanctions and hurt the Russian economy further. But the data that we are getting on a regular basis includes what's going on with the Russian Ruble, because that's an international market, so Russia can't stop everybody watching the value of the ruble move up and down. What's going on with regards to inflation, so we are getting that data, interest rates, the balance of trade, and the country's current account. And what we've seen over the course of the last week is that the Russian central bank have increased interest rates again, and they are now at 13%. So over the course of the last 2 months, we have seen 3 interest rate rises being applied, and the official rate of interest has been increased from 7.5% to 13%. Now, the Russian central bank have stated that the reason that they're increasing rates is to bring down inflation. But when you look at what's going on with inflation, that doesn't really make sense. When you compare the current rates of inflation in Russia to what's going on in the rest of the G20, they've actually got relatively acceptable rates. So in today's video, I want to investigate what's going on in the Russian economy. So I'll have a look at exactly what's been going on with interest rates. And the profile is very different to the rest of the world. We'll then have a look at what the situation is with inflation. We'll have a look at the balance of trade and the current account, and also what's happening with the Russian ruble. Because if you've been following the channel, you'll know that recently the Russian ruble passed a landmark figure of $1 to 100 rubles. So basically 1 ruble was equal to 1 US cent. And that level appeared to be a bridge too far from President Putin's point of view, who instructed the Russian central bank to do something about it. They organised an emergency meeting on the same day, and rates were increased by 350 basis points. So we'll see exactly what's going on with the ruble now and see what the impact of the recent movements in interest rates has been on the currency. And then finally today, I'll wrap up with my summary as to what I think is going on in Russia right now and what's likely to happen over the course of the next 3 to 6 months. So before we get started on all of that, once again, thank you so much for all of the positive messages that I'm receiving in the comments below. Really appreciate that. It's great to hear that you'd like to see me back on screen. And if you'd like to see more face-to-face videos like this, including some that are not posted on YouTube, please check out my Patreon channel. However, if you don't like Patreon and you'd like to support the channel, please have a look in the description below where you'll find links to buymeacoffee.com as well as my YouTube super thanks and membership scheme. This chart shows the movement in the official rate of interest in Russia dating back to the start of 2022. Prior to Russia's invasion of Ukraine, the official rate of interest in Russia was 7.75%. However, immediately following the start of the war, Russia announced that interest rates had been raised to 20% as an emergency measure to combat potential high levels of inflation. That level of 20% was only maintained for a very short period of time, and over the course of the following 6 months, Russia rapidly reduced its interest rates, and by October 2022, the official rate of interest was down to 7.5%, which interestingly was lower than it was before the war started. And that level of 7.5% was maintained until the 21st of July, when Russia announced that it was increasing interest rates by 1% or 100 basis points to 8.5%. And at the time, it was claimed that this was because of what was happening to inflation. However, the official rate of inflation in June 2023 in Russia was 3.3%. So that story didn't really hold water, and a lot of commentators were claiming that the increase in interest rates was because of a further deterioration in the value of the ruble. Despite the interest rate increase, the value of the ruble continued to fall throughout the rest of July. And by the 15th of August, the exchange rate against the US dollar had fallen below 1 to 100. And this was the first time in Russia's history that this had happened. And as a direct result, the central bank organised an emergency meeting and announced that interest rates had been increased by 3.5% or 350 basis points to 12%. Now, that increase in interest rates did have a short-term benefit in terms of the value of the ruble. However, the ruble has continued to deteriorate, and on the 15th of September, the Russian central bank announced that interest rates have been increased again by another 100 basis points, or 1%, to 13%. And commenting on the latest increase, the Bank of Russia's governor, Elvira Nabiullina, said, "We raised the rate due to the appearance of inflation risks, and we will keep it at high levels for quite a long time, until we are convinced of the sustainable nature of the inflation slowdown." So let's have a look at exactly what's going on with inflation in Russia. This chart shows the movement in the official rate of inflation in Russia over the course of the last 5 years. And the reason I wanted to go back 5 years is to talk about exactly what happened at the start of the war and then have a look at what's happened over the course of the last 18 months. And what this chart shows is that at the beginning of 2022, before the invasion started, the official rate of inflation was running at around 8%, and that rate was comparable to what was happening in the rest of the world. During the course of 2020, we had lockdowns as a result of COVID-19 all across the world, and then in 2021, as those lockdowns were released, there was a lot of pent-up demand. People wanted to go out and spend, and that spending spree drove up prices and caused high levels of inflation all across the world. So 8% inflation at the start of 2022 can be considered to be relatively normal. Now, following Russia's invasion of Ukraine on the 24th of February 2022, inflation did spike up to around 18% in Russia. And this was predominantly caused by supply and demand. A lot of companies that were exporting goods to Russia stopped those exports, and so there were shortages of various products within Russia, and so we saw prices rising. Now, as we've just seen, in response to this, the Russian central bank hiked interest rates to 20% to try to discourage spending. And you can see that in the first part of 2022, the rate of inflation came down rapidly. And if we now switch the scale of this chart to look specifically at the last 12 months, you can see that in September 2022, the official rate of inflation was 13.7%. And over the course of the following 5 months, there was a gradual reduction in inflation. And by February 2023, the official rate of inflation was 11%. Now, what happened in March 23 is quite remarkable, because inflation fell from 11% to 3.5% in 1 month. That is an incredibly fast rate of reduction and not something that we've seen in any other country around the world. And if we quickly jump back to have a look at what was going on with interest rates at that time, you can see that there was no movement in interest rates. In fact, interest rates in Russia had not been changed since October 2022. So the massive reduction in the rate of inflation in March 23 is really quite bizarre and isn't something that's easily explained. Inflation then fell further in April 23 to 2.3%, meaning that Russia had one of the lowest rates of inflation in the whole of the world at that time, despite the fact that the war in Ukraine was still going on and the value of the Russian ruble was falling dramatically. And what's even more bizarre about this chart is that over the course of the last 4 months, inflation has started rising again. We've seen month-on-month increases in May, June, July and August, and the current rate of inflation for Russia is 5.2%. Now, the Russian central bank has been attributing the increase in interest rates to what's happening with inflation. And just to remind you, interest rates were increased by 100 basis points on the 21st of July. And at that point, the official rate of inflation in Russia was 3.3% for June. So that doesn't really justify an increase of 100 basis points. We then saw another increase of 350 basis points on the 15th of August. And at that point, the official inflation rate in Russia was 4.3%. So once again, there is no justification for an increase of that nature. And on the 15th of September, there was a further 100 basis point increase in interest rates to 13%. And to put Russia's current rate of inflation into perspective, this chart shows the latest data from the G20 and shows that 5.2% inflation is lower than the current rates in Italy, Australia, Germany, United Kingdom, India, and of course Turkey and Argentina, but those two countries are completely off the scale. And none of these other countries are taking the same approach to interest rates that Russia is taking. And what this really indicates is that the increases in interest rates are not being driven by what's happening with inflation, but rather are more linked to what's happening with the Russian ruble and Russia's trade. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the course of the last 12 months. And what this chart shows is that over the last year, there has been a continued and consistent decline in the value of the ruble. This time last year, one US dollar was trading for around 60 Russian rubles. Today, it's trading for more than 96 rubles. And if we zoom the scale of this chart out and look at what's been happening over the course of the last 25 years, you can see that the current exchange rate is the worst that Russia has ever seen in its history, excluding the very brief fall in value that was seen immediately following Russia's invasion of Ukraine. However, that fall was quickly reversed as a result of the actions of the Russian central bank, who stepped into the market and bought currency to bring the value back up. And if we zoom in and have a look at what's been happening over the course of the last 6 months, and I'm particularly interested in looking at what happened around the date of the interest rate increases. On the 19th of July, the value of the Russian ruble fell below 90 to one US dollar, and this was the third time that this had happened in July. And on the 21st of July, 2 days later, the Russian central bank announced that it was increasing its official rate of interest by 100 basis points to 8.5%. And as you can see, the initial impact of that announcement was an improvement in the value of the ruble. However, that improvement proved to be short-lived, and on the 15th of August, the value of the ruble fell below 100. Now, the fall to that level isn't actually showing on this chart, because this chart is plotting the end-of-day value. And the reason that it's not showing is that on the 15th of August, the Russian central bank organised an emergency meeting and announced a 350 basis point increase in interest rates, which had the direct effect of improving the value of the ruble in the international markets. And at the end of trading on the 15th of August, the value of the ruble had improved to 98. The value of the ruble subsequently improved further over the course of the next week or so to around 93 to one US dollar. However, once again, the impact of the interest rate increase was short-lived. And over the course of the last couple of weeks, we've seen increased pressure on the value of the ruble. And as a result of that pressure, the Russian central bank announced on the 15th of September that interest rates had been increased by another 100 basis points to 13%. So I think the overall summary of what we're seeing here is that the interest rate increases that the Russian central bank is introducing appear to be directly linked to the value of the ruble rather than what's happening with inflation. This chart shows the movement in Russia's balance of trade over the course of the last 5 years. And the balance of trade is basically the difference between the value of your exports, so the money that you're being paid for everything that you're selling, and the cost of your imports. So this is similar to your checking account. You've got money coming in and money going out. If you're earning more than you're spending, then your balance of trade would be going up. If you're spending more than you're earning, then it would be going down. And what this chart shows is that over the course of the last 18 months, Russia has seen a significant fall in the balance of trade. And the current levels are the worst that Russia has seen since the COVID-19 pandemic. And if we change the scale of this chart to show what's been happening over the course of the last 12 months, you can see that there's been a huge fall in the balance of trade. In September 2022, Russia reported a positive balance of trade of almost 23 billion rubles. However, in July 2023, that figure was down to 5.5 billion. And I think what's really interesting to note about this chart is that there's been a significant fall in 2023. And this corresponds directly to the increase in the sanctions. If you've been following the channel, you'll know that the European Union introduced an outright ban on the purchase of Russian seaborne crude oil on the 5th of December, and followed that up with a further ban on the 5th of February for all refined products. So what we're seeing here is that over the course of the last 18 months, and particularly the last 7 months, there has been a significant reduction in the balance of trade as a result of falling income. And this chart shows the movement in Russia's current account, and the current account is basically similar to your checking account. If you're earning more than you're spending, you'll be building up a nice cash balance. If you're spending more than you're earning, then you'll be dipping into your savings and your balance will be going down. And what this chart shows is that between July 2020 and July 2022, Russia's current account increased in virtually every quarter. However, over the course of the last 12 months, the current account has reduced in value every single quarter. And this, of course, reflects the impact of the sanctions and the fall in income that Russia is earning. So what's the summary and conclusion today? Well, I wanted to post this video to give you a latest update as to what's happening in the Russian economy. And as I mentioned right at the start of the video, the data that we're receiving is extremely limited. So we can't dig down into all of the different facets of the economy in the same way as we can for a lot of other countries. But the data that's still being provided includes interest rates, inflation, and what's happening with the Russian ruble. And I think what we've seen over the course of the last couple of months is really fascinating, because the external message to the rest of the world coming out of Russia is that Russia is doing fine. The sanctions aren't having as big an impact as the West was hoping, and Russia has been able to pivot and sell more oil to China and India to replace all of the lost sales from Europe. But what we're seeing from the data doesn't really back up that story. Over the course of the last 2 months, the Russian central bank has increased interest rates by 550 basis points, or 5.5%. And that is a huge movement in a very short space of time. In fact, 5.5% is higher than the actual interest rate in most countries in the West. So this represents emergency measures. And the Russian central bank has stated that the reason that they're doing this is to combat high levels of inflation. But when you look at the current rate of inflation in Russia, that story doesn't really make sense. Russia's current rate of inflation of 5.2% is less than it is in Italy, Germany, Australia, the United Kingdom, and India. And none of those economies are introducing emergency measures to try to bring back runaway inflation. If we're talking about inflation getting out of control, we're looking at double digits. If Russia was currently experiencing 15 or 20% inflation, then it might make sense to hike interest rates by 3.5% in 1 month. But it isn't anywhere near those levels, and the target rate of inflation in Russia is 4%. So 5.2% is only 1.2% against where the Russian central bank wants it to be. So the story doesn't really make sense and indicates that Russia is increasing its interest rates for other reasons. Now, when we looked at the balance of trade and the current account, you can see that over the course of the last few months, Russia has seen a monthly fall in its balance of trade. So in relative terms, the money that Russia is earning from its exports is going down against the cost of its imports. And as a direct result of that, the balance of the current account is also going down. And that situation is applying pressure on the Russian economy. And as we've talked about in other videos, Russia is currently posting large deficits. And those deficits are currently being funded by the National Wealth Fund. So there are major problems happening right now in the Russian economy, but those problems are not centered around what's happening with inflation, but rather they're centered around the losses that Russia is incurring as a result of its invasion of Ukraine and the huge amount of investment that Russia is putting into that war effort. And the problems in the Russian economy are manifesting themselves in what's happening with the Russian ruble. As we saw earlier in the video, over the course of the last 12 months, the value of the ruble has plummeted. And when it passed the 100 mark against the US dollar on the 15th of August, the central bank was instructed to do something about it. They stepped in and increased interest rates by 3.5%. But the reason that the value of the ruble is falling in the international markets is twofold. Firstly, nobody wants to buy the ruble because Russia is now doing trade with fewer countries. And the increase in trade that it's done with India and China hasn't really helped the demand for rubles because those deals are being struck in Chinese yuan and Indian rupees, not Russian rubles. And the secondary factor in terms of the fall in the value of the ruble over the last 12 months is that the Russian central bank can no longer afford to step into the currency markets and bolster the value of the ruble. Back at the start of the war, the Russian central bank was doing that, so it was artificially inflating the value of the ruble. But as Russia has posted more and more deficits over the course of the last year, the central bank no longer had access to enough funding to be able to keep the price up, and therefore the price has now moved to a true free market trade. So in terms of the impact of the increase in interest rates on the currency, the logic is that when you have higher interest rates, it should have a positive impact on the currency because it's attracting more investment into your economy. But the problem that Russia has at the moment is that there are other factors at play. Despite the fact that they've increased interest rates, it doesn't make Russia an attractive investment opportunity for a lot of countries who no longer want to do any business with them. So what we've seen in terms of the impact of the recent interest rate increases is that it's had a very short-term influence on the value of the ruble. So it has brought the value back up. However, unfortunately, from Russia's point of view, it isn't having a long-lasting impact, and the value of the ruble is continuing to deteriorate. So the overall summary of today's video is that the recent increases in interest rates do not look like they've been brought in by the Russian central bank to address what's happening with inflation, because inflation is currently at a manageable level, especially when you compare it to what else is going on around the world in other economies. So the Russian central bank is obviously doing this for other reasons. Firstly, to bolster the currency, to try to bring back the value of the ruble. And secondly, to try to deal with the problems that are going on in the Russian economy, relating predominantly to the sanctions applied against Russia, which are causing huge deficits and putting Russia at risk of running out of cash at some point over the next 6 to 12 months. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.